Alrighty, so another trade recap. This one was from Wednesday, the 18th of June, so a few days ago. This one ended up in a break even and was quite the quality position. I really do like this one. And there's just a little thing that I wanted to cover on the management with this one specifically that has stood out to me, but I'll get to that in a second. However, decent position, and I'm happy with the way that it was managed, and I'll run through it now. So, on the high time frames, on the weekly time frames specifically, not shown here, this supportive box region at one spot 28 was pulled from some prior weekly lows, so it was literally just a large double bottom on the weekly time frame. Then you'd step down to the daily time frame. We've got this perfect descending wedge down into that weekly supportive region. So very nice. We had the three touches, and then we had the bullish engulfing pushing price off of the lows. So from a directional prediction, it doesn't get any better than this. This was fantastic. I really liked it, and that was the foundation in which the position was built on. So now on the 4 hour time frame, what we've got here is we have the double bottom, higher low, whatever you want to call this, and then we had the wave one breakout through that 4 hour 50 EMA, and in conjunction with that 1 hour 50 EMA. So the wave one breakout through the 4 hour 50 EMA, through the 1 hour 50 EMA was both very aligned, very clean, very swift retracement back into the 4 hour and the 1 hour 50 EMAs, which were lining up perfectly. So just to quickly cover more of this 4 hour time frame, we've got this supportive region that I mapped from, I believe it was around about here. No, it wasn't. It was from these range of the wicks, but that just showed like that support, break down, resistance, break above, acting as support. We're looking for that next wave to the upside. So decent confluence point. We also have the back end of this trend line here coming down. So we had the wave one breakout, we had the wave two pull back into that high confluence area, looking for the bounce up higher, and that's exactly what we've got. So hourly time frame, we've got the wave one breakout, we have the wave two pull back down into the EMAs, which line up quite nicely, and it was this low test hammer candle that was the entry signal. I waited just up until the last 5-10 minutes of the candle before it closed, and that aligned nicely with a 5-minute 50 EMA breakout for the entry. So I took the position on the 5-minute 50 EMA breakout. Then 10 minutes later, we got that 1 hour bullish candle close with the low test there. So that was the entry signal. We had the rejection and that 5-minute 50 EMA breakout, which was good. So once we were in the position, I went to bed a little while later, and price really didn't do a whole lot more. It just consolidated overnight, and then the next day, price did end up getting some momentum and breaking into the recent highs. So it was at this point in time here on this big bullish engulfing candle that once price had met the FTA, the first trouble area, the recent 1 hour highs in this case, I moved my stops below the recent lows here, which was here. So we're moving about 0.5 R from the position now that the price is showing a bit of commitment. Not enough to reduce my risk entirely and remove it, or trail my stop in profit, but enough to just reduce the full risk. I don't need to take a full loss at this point. So once price hit the FTA, moved to break even, and then price just started to chop and consolidate a little bit higher into a new higher high. So as per my trade plan, if price makes a higher high before we get that initial retracement after the FTA, then I'll look to move to break even, because again, if price has made a new higher high, there's no reason for me to take any more than a break even at that point. There's plenty of room for price to pull back in against me before getting taken out. So it's exactly kind of what's happened. I waited till price was in a new higher high. It started to stall out. We got that double top. Price wasn't showing too much commitment, so it looked like it was going to come back down and test these lower prices. So stop was moved to break even whilst it was up in these new highs, because I knew that if price was going to come down, it's probably going to hit this third touch of this trend line here, that 1 hour 50 EMA, and then possibly make its next leg to the upside. But unfortunately, that's not the case. It broke straight through and ended up taking me out for break even. So In terms of stop placement, break even here I think is more than understandable. That's a decent chunk of price movement to occur before I say I'm out and I don't want to take a loss. If I had left my stops open, yeah, I'd still be in the position. But what if it sank straight through and I was running like 1.5 R and it ended up taking a full loss? Like now I'm down 2.5. That's not on. So that was plenty of room for price to move. Unfortunately, it didn't turn around and it just came straight back down. Took me out for a break even, and that is it. So took the break even on that. Now, in terms of the management approach on what I wanted to say, is we want to trail the market structure based on the higher highs and higher lows in this case because we're looking at a bullish scenario. So we had the low, we had the high, we had the higher low, we had the higher high, and we know that market expectation states that if price were to come all the way down to these previous higher lows and maintain, it's still classified as a bullish trend, and the market is expected then to make its new leg to the upside. So only once we break these previous higher lows to the downside and get back below this region, the price becomes a bearish trend and we have that shift in momentum. Now, having the stops below these lows from a principal perspective makes sense because you want to give it as much room as possible to come against you before allowing it to breathe and then move back in your favor. But again, this was more than enough space for the price to make up its mind. I wanted to see price reverse from here and then move to the upside. It didn't. This gap here is in free fall. If it broke my turning point, then I'm out of the position. It doesn't have my conviction anymore once it gets back below this. So that's why the break even was put in place as per the trade plan, because price had already made a higher high. There's just no reason to take any deeper of a pullback than that break even point at this position. So what I wanted to say is that whilst yes, technically this is a bullish trend and we were just revisiting this 4-hour demand zone and it may still push up and the structure is still intact, from a logistical, practical, realistic, and financial perspective, it's not something I wanted to do, is open up myself to the exposure of taking a full 1 hour loss whilst price is already trading at 1.5, even if it means I'm getting stopped out at break even and moving on should price end up going to target. So that was just a little bit of nuance there where it's very easy for me to look at this and say, fuck, it's still a bullish trend. It hasn't taken out the previous high or low. What am I doing? But in actuality, when you weigh up the realistic implications of doing so, it just doesn't make any sense. Even if it means I'm getting out of the position, price doesn't come and take out my stops, which were behind behind the lows, and then doesn't end up going onwards should I have still been in the position. So hope that makes sense. It looks like at this point we might just have some trouble at this recent head and shoulders trigger point. We may just form this lower high and then into a lower low, and that could have been all it was. Like the way in which this is moving up isn't giving me much confidence. It's not a swift, impulsive move to the upside. It's quite corrective and quite choppy. So that's just a little management quick tip that to me kind of resonates, is that I don't really want to be taking a full loss, or in this case, it would have been a 0.5R loss after taking the full 1.5R in profit back to a loss, and then I'm down 2R on the position because I had my stops below here. So break even in the end on that one. Hope the little explanation on the management makes sense. Even though we are trailing the higher lows, we have to also bring in the realistic implications of what that means. And in that case, that would have been risking the 1.5 to 0.5 move. So we would have been down 2R should price have actually come down and taken out my stops had I not moved to break even. So that's the position. Thank you very much for watching, and I shall see you in the next one.